Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Monday, August 22nd. It is 6:38 a.m. as I am starting the video. And as always, please run your player at 1.5x. A lot of red on the board this morning. Taking a quick look at futures. Equities are down between 1 and 1.4% for the NASDAQ. One thing that it is up is Nat Gas up almost 3%, and I have it trading above the 14-year high going back to 2008. So that is, if it holds, breaking out to all-time highs. And so that's notable. Over on the macro front, not a lot going on today. I think really all eyes are going to be on CPI that comes out on Friday, the inflation number, and then shortly afterward, I think that comes out at 8:30, and then Jay Powell will be making a speech at Jackson Hole at 10 a.m. on Friday. So a lot is going to be on that, or a lot of eyeballs and ears will be parsing that very, very closely. Over on the earnings front today, quiet morning, but then in the afternoon we've got Zoom and Palo Alto Networks. Those were the two biggest ones on the board that I could see. I think we've got a real witch's brew out there right now. Part of it being the U.S. dollar and part of it being interest rates, all kind of conspiring together along with the big options expiration on Friday. We always talk about these option expirations as potential major pivots in the market, and we were kind of worried about, what the possibility of this week might bring, not only looking at Jay Powell, but just the idea of, $2 trillion in option value rolling off. That really enables price to find a more natural level than when, these call walls and put walls get established over time. It's very hard for, price to break through those levels towards the end of an option cycle. So that is all rolled off. Price is making a move down this morning, so we're gonna have to watch that really, really carefully. Haven't shown the U.S. dollar in a while, but I think it bears watching. You can see just tremendous move since the beginning of the year. Down here in February, down around 95, and we're up at 108. And the thing I wanted to show you is these momentum resets at the zero line on PPO. You can see here we had a momentum reset back in early June, corresponding to this area here. And you can see that momentum reset really catapulted price all the way up to the highs that we got in early July. And then we backed off, right? We backed off. I don't think it was a coincidence that, when this was backing off, that the market was rallying. We had the high PPO bear cross, which was part of this, and now we've had another momentum reset right here at the zero line, bringing this up. So what I'm saying is that, at least from a technical perspective, the dollar has a big runway ahead of it, because it's not like PPO is extended like it was over here. It's already gone through the reset. So during that reset process, momentum comes out and then it builds for the next leg higher. And you can go back and look at these past cycles, low momentum, then it builds up. There's a high level bear cross, it pulls back, resets, pulls back. It's just the way of the world, the way of stocks, momentum gaining and falling. So a rising dollar is part of a kind of a toxic cocktail in my mind. And also, part of this past rally has been falling rates. And we've, if TLT is falling, rates are rising. During this period here, the stock market had trouble. This was the down move. We bottomed in mid-June. Rates moderated. TLT rose, and that put a bid under tech and stocks in general, all the meme stocks and bubble stocks and what we've been talking about. But now we've had a trend line break, and now we're back here at 113 with a rate pop on Friday. So dollar rising, rates rising, is not a great recipe for stocks in general. Also, on Friday, Germany was out with its PPI, 37% year over year. I mean, and we're screaming about 8.5%, right? I mean, imagine that. I mean, highest reading since World War II. I think those readings started coming out like in 1947 or something like that. Highest inflation since 1947 in Germany. And we talk about nat gas and energy over there. We're paying 9, they're paying, God, what is it, 7-8 times that in over there. And I think it's just starting to bring Germany and Europe as a whole, to its knees. I mean, imagine just being in that environment as a consumer or as a business. When your cost of doing business is going parabolic like that. So we've been looking at this VIX trend. Now it closed below on Friday, but now, of course, with the down move, it's up here at 23. So that's ultra cautionary for you. If you've been hanging out in longs, we talked about getting protection on Friday ahead of this week or paring back some of your longs. Now you've got, kind of triple confirmation. This trend line has broken. We're up here at 23. And so I think that's cautionary. Bitcoin, kind of a proxy for liquidity. We had the big move down, and now it looks like we're putting in a bear flag right here. That's that classic bear flag look with the looks like the path of least resistance seems to be lower. I think there would be a breath of life in Bitcoin if it could get back up above 22,000. But even there, that classic impulsive down move, little consolidation, and then it breaks for the next measured move down. And you can see just eyeballing it, the measured move, this leg 1 added on to the bear flag is going to bring you right back down to that 19,000 level again. Uh, Oil was up a little bit on Friday. Still haven't broken the downtrend line. There was a lot of activity on Friday in the energy space. Oxy was gaining a lot of attention. Warren Buffett got regulatory approval of, I think, taking 50% of the shares. So Oxy made an outsized move. Some of us in the actually, I think it was Ron that pointed it out early, was able to make a nice trade on that. NIMO oscillators diving to the lows. Now we got to look at the other side of the coin. We're up here. We were overbought. Really did not pay a heavy. There wasn't a big cost to bear here because the indexes didn't break, but now they have. So now they're racing towards oversold. Same thing on the NASDAQ down here at minus 22. When we go over to SPY, few things to point out. Number one, we got stoned here at the 200 simple right here, there for multiple days. Now we have broken that trend line that we had in place. That's a bearish move, very, very cautionary. We broke trend on RSI, and we've got a high level bear cross pending on momentum. And with the down move in the pre-market, assuming that holds, you're going to have a high level bear cross here on momentum, and probably break this trend line as well. I think we are actually down here in the 417 kind of area, so probably testing the top of this gap here on the open. Here it is on the 60-minute chart. We had the gap down on Friday. That move, minus 1.34%, I think was probably held in check a lot by the option expiration moves that are happening under the surface. But now we've got another gap down set up this morning. So, gap down, consolidate, another gap down here around 417. Remember, this is our massive support. We've got a $5 gap. You can see where it starts, etc., and where it ends. But then you've got the last stop, last stop out of Dodge here at 410. You break that, then there's no doubt at all heading lower. While we're in this area here, you can certainly make a case that, just go back to the daily chart, coming down into the 200 EMA and 20 EMA, come down to 415, find some stability there at the 200 and the convergence of the 200 and the 20. You could certainly make a case for that, and that may well play out. But what you really got to watch out for is if this big zone were to break. I doubt it's going to be today, but at any point in the future, really, because this is the support zone that's in place. So we could come down, bounce, come down, and break. So all eyes are going to be on that. Notice on the indicators that the RSI is now down in the bearish regime on the 60-minute chart, and PPO as broken below as well. Over on the Qs, we never did make it up to the 200 SMA. On price, we two bearish, well, a couple of bearish things happened on Friday. We lost the 8-day in pink. We lost the 200 EMA in gold, and we are down below the downtrend line, which should have acted as support. And now with the gap down this morning, we're testing this our big support zone that goes down to 317.35. You don't want to break below that. And I think we're testing that now in the pre-market. Notice the high level bear cross in PPO, and notice that with this morning's move, if that were to hold, I'm sure we'll drop down below 50 on the RSI. Over on the 1 hour chart, I've got the gap down marked. Here we've got that $5 gap below our big, which is in our big support zone. So really what's happened, and I didn't look at the actual numbers, but I think on this gap down, we're going to basically open down here, so that $5 gap will still be largely intact when we open. So again, there's always that possibility, that this first or support area holds, and then, they race it up to try and close that opening gap and then potentially fail. So whenever you've got a gap up or a gap down, you've always got to consider that possibility of that technical move where they try to fill the opening gap right out of the gate, just to check it off the list, as it were. So really got to have 317.50 really in the crosshairs. You can see that PPO has gone bearish, and RSI has gone bearish as well. This we do have an uptrend line here that comes in about 307.50. We've got another line of support down there, but really, I think if we were to lose 317, then you're going to get a deeper pullback. IWM was in relatively good shape. We had taken out the 200 SMA, but then we've had 2 consecutive days of gap downs, and then we're gonna, gap down again this morning. You can see we closed Friday right on the 200 EMA. We've got a gap below, and then we've got this downtrend line. Really, the next important level of support down below is going to be this 188 to 186 type zone. But after you get a setup where you break out and then this downtrend line can't hold as support, then this looks like the bull trap, right? Fake breakout, breaks out, then comes back into the range. It's got more work to do to the downside, but you've got a high level bearish cross here, and you've got a trend line violation here. It can still be saved, but these are very cautionary when taken in combination with, breaking above the 200, then, kind of not exactly waterfalling, but moving quickly to the downside. Here you can see it on the 60-minute chart. We've got a big gap here between 193 and 190, and that would bring us down into that bigger type support zone, this little value area here. We talked about 188, 186. That's down at the bottom of this zone here. We certainly would want that to hold. If it doesn't, then that just opens up more and more downside. Meta had an interesting day on Friday. Remember, we had a big gap in here. We had been hyper focused on 172, and it came down for a touch. I guess it was Thursday. We had bounced up, and then Friday we gapped down below that 172. You can see where it reached up a little bit, kind of back touched that important level at 172, but then it failed and really got pinned. The gap went down to 168, and you can see that after the initial move, it just kind of hovered there the rest of the day, pinned below that gap. So now the sum of all fears is in place for bulls in Meta, because we broke out of this big trading range. All the rejections along that line, that became support, and now we're back down below. So all this now becomes resistance again, with a failed breakout and a move back into a major trading range. So just from a technical standpoint, as long as price is below 172, my target's going to be 155 down here at the bottom of the trading range. Very much like this setup here, where we broke out, big move up, gap down, bull trap, broke into the old trading range, and made a fast move down to the bottom. So, not saying necessarily it's going to go fast, but once you're inside this range, you can just kind of tell the unfinished business is to come back down and recheck the bottom of the range. Apple down 1.5% Friday. Really still one of the strongest names, but now the problem is that we broke out and we moved back into the channel. So we lost this 172.50, and so now that becomes what was once support. Remember, this was green on Friday. Well, now I've changed it back to red because it's resistance again, and now we lost the midpoint of the channel. So now the door is open for a move down to 169, 168 at the bottom of the uptrend channel, and then that will be a big location. The next big location will be the gap, and then very big line of support at 164. Those should be highlighted areas if you're into trading Apple. Tesla broke this trend line we've been watching, so now from that standpoint, it's on the wrong side of the chart. I think the door is open down for a test of this 860, 850 area. Support, 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 support. You break 850, then you're going to be coming back down to 825 and 805, and those numbers should be familiar with you because we were right back talking about those areas back in here. So Tesla, to get back on track, really needs to break back above 915 and get back above this trend line. Microsoft moved down out of the gate and then just hovered right here at this $5 gap. I did not see where it was in the pre-market, but I would imagine it's probably going to open down in this 282 area, just kind of skip the whole gap and just move right to the bottom. So be aware of that setup of a gap above on the open like we just talked about. But the main thing on Microsoft is broke above 290, which was significant because that's a big line on the daily chart, but couldn't make any progress. And then Friday couldn't hold it. So now 290 becomes big resistance again. And then our next layer of super support is at this 270, 278, 280 level, where you've got the big volume over price profile with transactions here. So you certainly don't want to see 278 fail. If that were to happen, then you probably got this thing rolling downhill pretty quickly. Amazon. Gap down, filled the gap. We talked about that on Friday, whether you were quick enough to get it or not. So this gap has been filled down to 138, let's call it. We've got a small gap here. Looks to be about $1.50 wide. But then you've got this big gap here. That's going to be a really, really important one for Amazon. Even if you don't consider yourself a big Amazon trader, I'd certainly have 132 alarmed, because that's a $10 gap, and that's pretty big. One thing I have really appreciated is the splits on Amazon and Google. I didn't used to really trade them very much. High prices of options, and it just really wasn't in my wheelhouse. I've found myself trading a lot more Amazon since the split, and same thing with Google. Not as much as Amazon for whatever reason, but if you had shied away from Amazon or Google in the past because of $2,000 options, take another look at it. So I mean, if you think about it, a $10 move on $130 stock is significant. What is that, 8% or something like that? So that is a big move for Amazon. So I'd certainly have that alarmed. And the thing that's also happened as that split has occurred, the bid-ask spread on Amazon and Google options has tightened up significantly. So there's not that inherent slippage that you would have where the bid and the ask are really far apart and which happens on very expensive options. So here on Google also, gap down, working its way through this large gap. And so we've got a value area here that begins at 115. I would highlight that 115. I think it's a significant level. Why? Because if you break below 115, then you're probably going to the bottom of the value range, which is down towards 112, 111. And that was where it made a move here to break out, and then the bigger move came as it broke out of this original value range here at 115, and that kind of catapulted it up into the low 120s. Netflix, made a little move into this $10 gap on Friday. I got a little short position for Friday here. Now I kept that, even though towards the afternoon it went against me. I don't know where it looked where it is this morning, but I'm trying for a gap fill by the end of the week on Netflix. We'll see if it happens. But if you're not in it, I would be looking at that 237.50 area for a break and a gap fill, and then this will be a big line. If we got down there, I would be covering. Why? Because you've got a big area of support right there. You'd want to see that break before you got short for a second leg. Moving on to semis. Lost this 236 area. Got a big gap down below. You've got a big area of support down here at 228. You can see it right there. This prior low, large volume over price bar, and then you've got the gap right above. So that's going to be an important area to hold. And then notice all the gaps. You got some pretty good sized gaps below. If this thing starts to roll downhill, those gaps will act as natural magnets since they haven't been filled yet. So watch that closely. Gonna blow through ARC. If rates are rising, the ARC complex is going to have a very difficult time. I mean, we've talked about that a million times. We also talked about ARC being the high beta move. So where the Qs were off, what were they off here? Yeah, they were off 2% on Friday, and ARC-F was off 6.5%. So we talked about also in terms of protection that maybe ARC would be a good way to play just because you get a lot of horsepower to the downside. And so we've got a very well-defined downtrend now in ARC-F. I can only assume if the Qs are down this morning, 1.5%, ARC will be down 3%. And I think if rates are rising, your non-profitable bubble stocks, Ponzi names, all that stuff are going to go first, or at a faster clip than your Apples and Microsofts and that kind of stuff. I think they're gonna go right back to where they left off on shorting those. And remember that a lot of this here was short covering. People getting squeezed out. They overstayed their welcome. They were short and then finally had to cover. Well, now it's starting to roll back over again. So keep that in mind as you're going forward with your ARC names. And you can see that ARC-G was down 4.5%, really at a key spot right here on the chart at 36. I can only assume that it's going to open lower, but you see the large volume over price bars here. Once you get below that, you're really on the wrong side of the chart. Let's see where we're at on the daily. Well, here you can see the large bar comes right in at 36. I think if you lose 36, you're going to go to 34 almost immediately. And then that's a big place on the chart. Why? Because support, then it failed, then it came up, and 34 contained all of these tries, contained this try, and then once it broke out, it acted as support. Again, you can see back here, it came back, held, and then advanced. Well, now when it comes back to 34, that should be support, and if it can't hold, you're going to get a fast move down towards 31, and that's that's a 10% move. $3 on a $34 stock is getting close to 10%, and that's a real nice move if you can catch it right. You can see here on flagship fund, you've got the big kind of line in the sand right here at 43.50, where you're at the bottom of value. And just looking at price action, you'll notice this in your chart studies, that price came right down and stopped where it was supposed to, and where it was supposed to was the top side of value, right? But then the next day, on Friday, you got the gap down, and that's also indicative of market behavior. Let me give you an example of that. So you're a technician and you're saying, I'm sitting on support, right? I'm waiting for this support break to possibly get a short. And also you got longs sitting there saying, I've got to hold 47 because we're at support. Well, the market doesn't give either one of those the opportunity to do what they want to do. The longs probably have a stop right below 47, and the shorts want to get short on a break of 47, but then the market gaps down to 46, bypassing the stops for the long and the entries for the short. So on some of this stuff, you've got to front run it from the standpoint of, if you think this thing is in a downtrend, if you didn't front run it, then you've just got to accept the fact that you pick it up down here at 46 and adjust your position. And if you were long, you just got to get out and probably do a little cussing that you didn't get what you really wanted. But that's what the market does. It knows these locations and jumps right over them in the pre-market and doesn't give you a chance to do what you want to do. Very much the same kind of thing here on ARKW. Now, we closed right at support on Friday, but now it gapped down, and I don't know where it is, but it's going to be down here. You can see that momentum has rolled over, that RSI has rolled over, and now we've got a well-defined downtrend line. You've got a support level here down around 54, and then towards 52.50. I'd have to go back. Well, we can look here on the daily chart, see where these lines come in. Yeah, see, this was another prime example of what I was just talking about. We closed Thursday right at the top of the old trading range, which we know is really, really important. And then you've got long saying, it's a breakout and a back test, which is true. That's fine. And you've got the short saying, well, it's still above that key support. So why do I want to get short now at support? And then the market has a big gap down, trapping the longs that were here and denying shorts the entry that they wanted here. So really now, sorry about that. Now we're back in the trading range, and the first target is 52.50, and the bottom of the old range is the new target. Bottom of the range. Once you break outside, you don't want to come back in, or else the target is at the bottom. So let's wrap it up there. Hope you got something good out of the video. Keep your head on a swivel today. Certainly respect your stops, and let's see where the day brings us. This has been Chris Buss with Traders Profit Compass. Talk to you next time.